Okay, this is the best I can do. I had to go and mess with the dogs, and I'm doing um, some scans here. There's some pretty amazing cross ups yesterday. I'm shocked. I really am. And I think I should probably go like this. Rotate device back. Orientation is locked. Let me see how this looks. Social. Let's go to YouTube. And we're going to go home. Your current live stream. Yeah, it looks kind of shitty. Orientation is locked. Rotate device back. Oh, you know what? Maybe I do. Maybe I should jump back in. I'll do it like this. I guess I'll do it like this. I guess I'm the only one watching. Live chat. Okay, let me see. I'll go to notes. Boom, boom, boom. Probably should be just live on the iPad. But I don't want to pick up my iPad and do that. There's some good scans. NASDAQ 100. Let's look at the S&P 100. Then I'm going to look at the energy sector. Let's see. Cut my hair yesterday, so it's a little messy. Gotta make sure the color's right later. Cat and Charter on the S&P. Let me put Charter in there too. Okay, I'm going to start the podcast now. Because actually I can, since I'm doing the podcast, I can do Active Trader Pro as well. Let's start that up. Because GarageBand does not take up that many resources that I can't do. Zephan must be off today. I'm starting Active Trader Pro so I can look at this stuff because I do want to trade today too. Today might be, honestly, a reporter from the Wall Street Journal posted an article, and that's what brought everything down. So it was a little crazy. Oh, why do I have to do this every time? Every time now I log into Active Trader Pro, I have to do two-factor authentication. There it is. Trash that. I gotta worry about sharing my screen on there, but okay. Okay, and I'm gonna move this down here. I've got to do so essentially what I've got to do is I've got to do my tax situation this weekend to see if I can buy a new computer. I was planning on it next year, not this year. Wow, Qualcomm. Down there, UVXY. There it goes. We're going to go to a 2-day. I don't care about a 5-day. We're at 1250. The VIX is at 31. SFIXY is probably the play, to be honest. Everything's just so oversold. Tesla's down. I think I have Tesla on my list. I should put Tesla on there. Apple falling back with everything else. Okay. Good morning to the last day in September. The last day of the September crash, as it is being known as right now. Nike came out with earnings yesterday, and it's crazy. Nike is down a tremendous amount. Let's look live streaming. On YouTube, what I'm doing today is a live on my phone, and then I will, I'll kind of just grab it and show you. Nike's trading at $83. Nike is down from, oh, why can't I move this? Nike is down from $11.71 because it just opened up. It opened up at 84, so it's significantly down. It's just, I mean, there's nothing you can do about this one. The Nike earnings, CFO said inventories in North America are up 65%. Costs are way up with inflation. It's just overall ugly. The Nike CFO said transit times are improving, inflation hitting demand. Nike says it's taking decisive action to clear inventory. That's just not good. This is a mainstay brand. Micron MU, which is another podcast favorite that I liked at 75. This one's up 1%, even though it was a horrible quarter. It wasn't good. It's got a MACD cross up. I'll show you on Active Trader Pro. Let's turn this around. See that MACD cross up right there? Oh, let's get it in focus. I guess I can't. But right there, that MACD cross up. We're on a 5-minute chart. See how the Bollinger Bands opened up for the open of this stock. We are down on the Dow, just 51 points. The NASDAQ is down about 19 points, and the S&P is down 3 points. The VIX is up, which means your VIX is going to be up. I'll take this back. And so you've got it's a Friday, guys. If you don't, I would say buy long term, but we're going to get uglier as the interest rates go up, bonds will go up, which causes the Fed, because the Fed's raising rates, bonds will go up. As bonds go up, we've seen the inverse where stocks just go down. This is going to continue. Plain and simple. The Meister, who is the Cleveland Fed president, sounded hawkish yesterday on her interview in the morning on CNBC. And then she doubled down in the afternoon and said, yeah, we haven't even started to fight inflation. So, which means they're going to go to 4.5% to 5%. It's as simple as that. They're going to go pretty hard at this. So, God, I'm looking at my notes and there's nothing positive. So let me go. One of the things that I wanted to look at was Charles Schwab. This came up last week, and Willie wrote to me on Instagram, and he said, "Hey, can you look at this one? It's got a cross up, and it looks like it might be good for a kind of entry point." I'm looking at the chart now on the algorithm. So the algorithm makes you 47% on this Charles Schwab. SCHW is the symbol. And again, this was last Wednesday it came up. Last Wednesday it had a cross up at 74. It got you out with a 1% loss down to about 72. But yesterday it had a cross up as well, 72.39. The RSI is at 51, so it's in no man's land. It has been trading between this 74 and 72 range for almost the entire month of September. Pretty much the entire month of September, it's been there. It kind of got to 75 at one point, but for the entire month, it's been in that range. Let me pull back a little volume support here to see where we're at. Yeah, I mean, it's just got this super, super tight range. I'll kind of show you here. Um, Let me flip this camera around. So that is the basically Charles Schwab for September. You can see it goes back to August 22nd. Now look at the volume. The volume, it's right in there. It's trading at 71.95, so it's down below where the algorithm gets you in at 72.39. I don't know if that's good. It's a Friday. I wouldn't buy it, Willie, but keep an eye on it because I do think that most likely there's a floor here because it's been capitulating so much. And if the market is going to go up in October, then Charles Schwab's going to go up. Simple as that. I was looking at Goldman Sachs, and we can look at Goldman Sachs here in FinViz. And the key for the banks is their book value. It's in the left-hand column, and the book value for Goldman Sachs is 301.88. It's now at 296. We talked about Goldman Sachs a couple months ago, buying it under 300. It went all the way up to 360. So you made your 20%, and that was a good one. If we look at Charles Schwab, SCHW, and we look at their book value is 1784. Yeah. So they're not even close to their book value. 72.94 is where you're at right now. So they're significantly above their book value. Now, performance year to date for Charles Schwab is minus 13%. That is significantly beating SPY. SPY is down by 20%. Let's see where SPY is. Year to date, 13%. Yeah, SPY is down year to date 23%. So if you look at Charles Schwab, they're greatly beating year to date. They've got a 1.12% dividend yield. The 52-week range is between 59 and 96. So you're 22% above your 52-week low. You're 24% below your 52-week high. I don't think that we're going to go to back to the 52-week high, but could you make 10, 15% on this? Or could you just hold this as a safety? Again, it's it's beating the SPY. So essentially you're beating the market. Now, the volatility, it's between 2.6 and 2.68%. If you're looking at that on FinViz, it's to the total right. So it doesn't look like it moves a whole hell of a lot. The algorithm, the average win is 11%, and that's only because there have been a couple of 10, 15% moves in this in 1,000 candles. If we go back, we see there's a gap here between 79 and 83 that hasn't been covered. That was on the way down. So I would expect at some point in time, you could see it go back there. This is a stock that I personally would not be adverse to holding for an extended period. So if you're looking for something that is a little bit safe, I think this one's a little bit safe. I don't think it's super, super safe, but it's a little bit safe because, again, you don't have a huge amount of volatility on this one. The algorithm does get you in 34% wins and 66% losses. So it's 29 positions over 1,000 candles. But I like that one, Willie. I do like that one. Let's look at Tesla. Tesla yesterday got beaten down. So they will release next week their monthly deliveries. And there was a news story that their monthly deliveries will be down. I've kind of said it before. I think that there's a gap here between 247 and 251. I think that's where we're going. I think that's where you're going to cover. I would not buy Tesla today. I would consider this one to still be going down today. Their earnings are on October 19th. So it's got some catalysts here in the future. AI Day is, I think it kicks off at like 8 o'clock tonight. It's not anytime soon. And it is more a recruiting event for engineers than it is for the public. So it's going to be super, super technical. But he might have some news. He might get asked questions. Remember, this is Tesla doing AI Day. So I would expect next week to be a better week, but I do think that that gap there between 240, about 247, I want to say, and 254 to be covered. You're down at 263 in trading today. One of my friends is an executive at Microsoft, and she's been asking me a lot about Microsoft. And I said, hey, it's going to get down into those 230s, and that's where it's at right now. Their earnings are coming up on October 25th, so you do have a catalyst in the future. You've got a gap here between 260 and 265 that's not covered. You've got a gap here between 283 and 286. At some point in time, and I don't know if it's a month from now, I don't know if it's 10 years from now. That's the problem. But at some point in time, that gap will be filled. The problem with Microsoft, if we go to FinViz, the problem with Microsoft is that PE of 24. The PE of the S&P is 16. So today, the assumption is that earnings will come down, which will bring that PE back up above 19, which will allow the stock market to fall even further. That's essentially what we're going to see. But with Microsoft, with a PE of 24, they have to continue their growth. Year to date, they are down 30%. They are down 32% off their 52-week high, which absolutely means nothing. They're only 1% above their 52-week low. This is one that could go back to its 52-week low. But God, guys, Microsoft. I mean, think about how many, who's got a PC? I don't. Who uses Teams? I don't, because I'm not in the workforce. Who uses the Microsoft Suite? I don't, because I'm not in the workforce. Who uses the Microsoft Cloud? Anybody who's got a Hotmail account, anybody who's got a Office account, probably anybody who's got any kind of business. Small, medium businesses, Microsoft makes sense for that cloud. I know Google has a cloud, but Microsoft makes a little bit better sense for most of the small businesses that I know. So in my mind, I think Microsoft is a buy and hold. I think anything below 240, you load up on this one. I think you buy more. It's capitulating here, but that doesn't mean anything. When the Fed starts raising rates next week, or I'm sorry, in November, this could get worse. And the Fed presidents are out there doing press right now. They want to beat down inflation. Inflation's going to be hard to beat down. Let's look at my notes. Halima Croft was on, and let's talk about energy, because I want to talk about UCO. UCO's been beaten down. She's on to saying that European infrastructure is just not secure for the winter. Next week's OPEC meeting could see a cut in production, which is no news. They could cut by 500,000, which is probably a positive. If they cut by 1 million barrels a day, that's going to be seen as negative. December 5th is the key for Europe. That's when Russian sanctions from the EU go in. And with Russian sanctions, that will trigger a huge price disruption. It will trigger a supply disruption. Demand is where the key is for something like UCO. If demand goes up and supply is down, you're going to see that oil price rise. And we had a UCO cross up here at 27.94. It's trading at 26.26. Now, I want to say I got caught in something like this. This was back in the pandemic where I saw, hey, oil is down at, what was it down at? God, I think it was at like $40, $20, somewhere around there. Just historic all-time lows. And so I said, you know what? I'm going to buy $30,000, $40,000 worth of UCO. It went down even more to the teens. And there were analysts screaming, it can't go any lower. It can't go any lower. We're seeing they were paying for ships. It went negative. And essentially when it went negative, what they had to do was they had to pay ships to store it off the coast. So you had this enormous, just flat UCO. It went down. I think I bought it in like the 20s or 30s, and it went down to about $6, or maybe I bought it at $5. They did a 25-for-1 reverse split. And when it went negative, that's what's ugly. So I want you to know that that's possible with this particular asset. UCO at 27.94 to me totally makes sense. But again, even the experts say, with price manipulation the way that it is, oil could go down. Demand is where the question. That's where the question is at. It's not supply. Supply is going down. Supply is absolutely going to go down. Is Putin, with his annexation of the Ukrainian provinces or states, is he going to try and call a peace deal? He could call a peace deal, and then all of a sudden you got Russian supply back on the market. You never know. Europe doesn't want this. There's a Nord Stream pipeline. Look at LNG. We talked about Cheniere taking cheap American nat gas and selling it over in Europe. LNG, I said when it dips under 150, get it. We had a cross up yesterday at 164. It's at 166 right now. If we go to Finviz and look at LNG, their forward PE, they don't have a PE. They're making money. Trust me, they're making money. They have a 0.96% dividend, which is special dividends they've announced. It is up 62% year to date. Its 52-week high is 178. So it's only 6% off its 52-week high. But with Europe and Nord Stream kind of being down, I would completely expect this to hit another 52-week high. The problem is that you're going to see is there might be a cap in Europe as to what they'll pay for natural gas. If that is capped, Cheniere still makes money, but I wouldn't necessarily expect that stock to completely rise. But UCO is another story. Right? UCO has that cross up. SCO has been your play because you've seen the downslide in this one. It's pretty clear that there's a downslide in this one. So let's take a look at Bank of America. This is an interesting one. And I'm going to go back and I'm going to look and I'm going to take the YouTube camera and show you guys this too. But if you go back to 91.92, and what I'm going to do is go to a monthly chart of Bank of America. You don't have a MACD cross up. I want to make sure the MACD cross up is coming at some point in time. But right now, Bank of America does not have a cross up. Let's take earnings off and let's take dividends off. And what I want you to show you is what we saw in the financial crisis. And we saw the bounce back. And it was even in 91 and 92. So I'm going to try and get more of a graph here. And we're going to move this down. And I'm going to collapse. I'm going to show you. Let's go back to 91, 92 so you can see it. So here, this is Bank of America. And you're seeing very similar trends. So this is a monthly chart. See, it's monthly. And you're seeing this. That is 1995, 1985. So you go over here to 1990. See that drop down there? You saw that. See that drop down there? That is the financial crisis. This was just kind of the falling of some of the financials. This is the financial crisis where everybody went out. That's where Warren Buffett bailed them out. But you can see it's clearly going up. You're seeing a downturn here. And that was COVID right there. You see COVID is, and I wish I could focus that. That's COVID in 2020. It saw a downturn. You're seeing a similar downturn. And I want to show you because I think banks will lead the charge. And specifically, I think Bank of America is a great option for this one. It's got a MACD cross down. It doesn't cross up just yet. And again, this is a monthly chart. But if I go into the algorithm and I run the algorithm on Bank of America, the algorithm makes you 43% on Bank of America. Buying and holding only makes you 26%. There's a 46% win rate. So it's almost 50-50. Your average win is 8.42%. The only reason it is up that high and it's going that well is because we've seen a tremendous run with the banks earlier in the year. The Bollinger Bands are super wide right now. They aren't synced up. You saw this huge downturn, but the MACD is about to cross up. Anything under $30, I think, is a great buy for Bank of America, because I think you can hold on to this one for quite a while. I don't think that this one's going anywhere. I think it's a good buy. Speaking of good buys and good buys, Cramer last night, there was a listener that called in about GNRC, generic, like we talked about yesterday with Jackson. And Jackson, I am sorry to put the kibosh on this one, but Cramer said GNRC was a good buy. He says buy 20 shares, and every 20 points down, buy more shares. He said if you want 100 shares, just split it up into 5 and buy 20 shares. Cramer is kind of the kiss of death. If you don't know that, look at inverse Cramer this year. And it's not that Cramer's bad. It's not that he doesn't know what he's doing. It's that anybody who's had any stock picking this year, other than bigger movers or short-term trades, he's a long-term trader. And when you trade long-term, this type of market kills you. It just absolutely kills you. But GNRC, we had a cross up. We talked about at 189. It's trading at 175. I think you buy it at 175. I think with the hurricane that just happened in Florida, it's crazy because they haven't released death counts yet. I've got some friends down there. Everybody's kind of saying that power's back on, but they don't have any news because the cable and the internet is still down. Cell spottage is tricky at best, but yeah. So Cramer says GNRC, but I do think Bank of America is a good one. We looked at Microsoft. One other one that looks interesting, and Tom brought this up, and I've been meaning to bring it up, but I'm just not sure if it's a good buy or not, is wheat. It's an ETF, WEAT, and it's based on wheat. And this one saw a huge run up with the invasion of Ukraine. And it went all the way up to like 12, 13, somewhere around there. Let's look at the 52-week range, because there is the assumption that maybe Vladimir Putin stifles the wheat export from Ukraine again. And it's been on a little run from about $7.89 to about $9. So you've moved quite a bit, because this is not a big moving stock. It went all the way up to $13. The 52-week range is $6.85 to $12.75. So it's almost 13. You're 31% above your 52-week low. You're 29% below your 52-week high. This one could move back to the highs. Now, earlier this year, it was at $5, $6, $7. So you do have some downside potential here. But I kind of like the setup here, because if Vladimir Putin kind of screws the pooch and then goes and kind of restricts wheat, this one could soar, because the price of that commodity could soar as well. And nobody knows what he's going to do, but it's an interesting one. Tom also brought up LabU. Let's look at LabU. He thinks that this one, it's a ETF. It's a directional ETF. It's a bull ETF, 3 times shares. The buy-in is at 740 on the algorithm. This one, it loses you 53% on the algorithm versus buying and holding loses you 87%. There is a 33% of chance of a win. The average win, though, is 19%. This one has kind of gone a little crazy. There are several, you can see right here, and I'll point this out to everybody on YouTube. I say here because I'm used to doing this. So here, this was a buy on July 21st and a sell on July 26th, 50%. That's the algorithm. The algorithm gets you some crazy, crazy good things, but 50% gain on that one. I like it. LabU, again, it's a directional bull, so it's going to lose you money over the long term, but it's a good trade. If you can get 740, I kind of like it. I mean, it's right in the middle. I think you play this one for maybe about $8. I think, the last one, it got you out 8%. 8% down. But the MACD is far enough down. The RSI is at 48, so it's in no man's land, but I like it. Another one, remember, Tom is a doctor. He's 52 years old, just like me. AMLX. This one has been going nuts, crazy. And if you look at it, I'll show it to the YouTube audience once I set it up. There's a gap down here between $10 and $11. It's 11, like 20. That hasn't been filled, but it's kind of filling this gap up. It should say there's a gap right below it, just down to $18, but it's trading at 28. Tom says that they have a ALS drug that is super promising. Now, it's a gamble because you don't know what's going to happen. The MACD cross up, it's kind of crossing up again. It's super high. The RSI is at 48, so it is in no man's land. It has had this crazy run up. The last one was a buy May 31st at 862, and you sold out on August 18th for 186%. Your average win on this is 74%. What's crazy is it's 43% wins, 57% losses. Now, if you just bought and held this one for 1,000 candles, it's 43%. Using the algorithm, you only make 16%. So while you have great wins, you also have great losses. That's typically what happens. I was going to, let me see, I'm just looking at my notes to see if there's anything else I wanted to cover. There's really nothing else. It's Friday. Do not buy. I may go on YouTube Live and trade live, though. I'm on YouTube Live right now. It's just on my phone. And sorry about the vertical. I didn't think there was going to be any scans that showed up with MACD cross-ups yesterday because yesterday was so ugly. But there was. Caterpillar, CAT, which is a mainstay, which has been beaten beyond belief, 166.07. This is an interesting one because I brought this up with Generac, the backup generator thing. I brought this up yesterday with them because it was a competitor. Their PE is 13. Their forward PE is 11. They're down 19%, so they're beating the S&P. They have a 2.89% dividend yield. Let's turn on dividends and earnings. So let's see. Their earnings are coming up October 26th. They don't have a dividend, so dividend X date has already passed, I should say. I'm going to bring this back to June 8th to try and see. There are significant volume shelves above this. So I think you've hit a plateau. Your RSI is at 40. You got a MACD cross up here at 166. It's trading at 167. I don't think this is one that you would mind buying and just holding. Now, if we're going into worldwide recession, you could slip back down. Let's look at a weekly stock to see where we were pre-pandemic. That's becoming more and more important. Pre-pandemic, you were at 140, about 146, 140, between 140 and 146. That could be where you're going. Unfortunately, that's kind of, if you look at a weekly chart, it looks like that may be where we're going. But on a weekly chart, you just pierced the 200-day. I'll show the folks on YouTube. See that? Now, here's pre-pandemic. That's right, pre-pandemic there. Scroll up, but you're capitulating right there. Now look at that volume shelf right there. That volume shelf right there is at 151. I would say if you bought here at 165 or 166, the way that the algorithm tells you, I can run the algorithm. The way that the algorithm tells you, if you run this one and you buy it at 166, I would put your stop loss in at probably about 155. Just based on that volume shelf, because it's probably going to go down to 150 and you can buy it at 150. If it hits 155, it's going to hit 150. So I think, that was an interesting one for me as far as scans go. Another one that Warren Buffett loves during, I should say a category that Warren Buffett loves during recessions is insurance. And Travelers Insurance, TRV, Travelers Company, cross up at 154. It's up today. It's got your typical RSI movement up from about 26, where it was oversold, to 42. And the cross up is at 154.68. Travelers is an interesting one. Another one that had a cross up, and this is crazy. It was in my portfolio yesterday, but it goes along with our Bank of America thesis and the banks. ARC-F, which has just been decimated. This is the financial fintech innovation. 1570, it's at 1548 today. 1570 was the cross up yesterday. It's up 0.72% today. The RSI is at 38. I'd say this is more of a, hey, let's see if we can kind of bounce back here to about 17. If that you get that 17, you got your 10%, take your 10% out and be happy. But ARC-F was one. Another one that's interesting, and full disclosure, I think I worked for this company, Charter Communications. They've been just destroyed because it's a consumer and the consumer's weak, and they're losing cable subscribers, and there's wireless services that are coming in here. But Charter Communications, they had a cross up here at 312. This is just, I think it was a few weeks ago, somebody had asked me, maybe it was Willie, maybe it was someone else, about Comcast. I hated Comcast, couldn't stand Comcast, still can't stand Comcast as an employee. As a company, they just print money. I mean, that's essentially what these guys do. Think about it. Think about your own situation. Who do you pay for internet service? I pay AT&T, but I wouldn't put money into AT&T stock. And you know why? Because they seem to always give me a deal. I'm paying $50 a month for 1 gig service. And they sent me a $200 gift card just to renew. And it's a 1 year. I'm not under contract, so I can disconnect at any time. I'm not going to disconnect at any time, but not under contract. But it's $50 a month. You know, I can get $50 a month from Charter. Charter is my cable provider at my home in Atlanta, and it's $50 a month for, I think, 300 meg service. I get $50 a month from AT&T for 1 gig service. And if you know anything about the technology of cable versus fiber, fiber's better. Essentially, I will tell you kind of the overview is cable is shared. So when you have more neighbors on your service and during peak hours, you are getting less service. Think of a water pipe. If everybody turned on their water all at once, your water pressure might not be as good. And that's what cable is. The fiber that the 1 gig service that AT&T provides me, everybody would have their own water pipe, meaning a direct source of water. And so you're getting 1 gig. Now it's shared at some points, but not at any point that's going to degrade it. So you do have on Charter their earnings coming up on October 22nd, 27th. It's far enough down. Do you run this one back up? Let's look at Charter's PE, because I do think that they, let's see, Charter. There we go. CHTR is the symbol, by the way. Their PE is 10, so they trade well below, but they're not growing. They do have mobile service, and if you are a mobile service looking for mobile service, I will tell you their mobile service, I think, is $35 a month, which is a great price compared to what most people pay on Verizon, what most people pay on AT&T. I went to the AT&T store yesterday with my parents. It was horrible. You can't get a free phone. They pronounce that, but it's with a qualified trade-in. You know, you're not getting it. Charter, great phone service. I think they're gaining on phone subscribers. But I will tell you, personally, you guys know I live a very cheap lifestyle. I pay $25 a month to Verizon for Visible. And the link is in my link tree. Go to my Instagram, go to my Twitter. But it's there. Sign up for it. You get $20 off. I get $20 off. I think it's going to charge you $40. But if you want a party to join, just let me know, and I'll give you my party to join. And as long as you have more than 4 people in your party, we don't share anything. There is no sharing of bills. There is no sharing of services. It's just, hey, I know this guy. And then it goes down from 40 bucks a month to $25 a month ongoing. It's $25 a month, 5G service, unlimited service. It is fantastic. I haven't been limited. I've been in stadiums and I just haven't been limited. So I don't know how they work it, but it's better. So far, I've found it significantly better than US Mobile. And I had a data plan on US Mobile that was not unlimited. I should say that. Their unlimited service on US Mobile, which I think also is $40 or $45. I think that's the same as Visible. But if I can join that party and get it down to 25 versus 40, why wouldn't I do that? You have to own your own phone. You can't get phone subsidies. I think they give you $200 back if you sign up and buy a phone, but I didn't want it. I just went out and bought my phone. There were too many logistics. Charter, September 29th. Wolf Research upgraded the stock from underperform to peer perform. Let's look at Comcast PE. And they are the two largest cable companies in the US. Comcast PE is 9. So Charter's got a higher PE, so it probably has a little bit more to fall. Comcast is at $30. I think if it goes under $30, I think it's a buy because, again, they print money. They have a 3.55% dividend. So I like it for that dividend. You can live with it. Let's see, top movers so far today. Those were the only scans. We talked about Tesla. We talked about risk of recession, killing oil prices and oil stocks. I still think energy is your play. We talked about wheat. AVCO is another one that Tom brought up. And this is a bio company, I think. Avalon Global Care. Let's see what they do. Let's go into FinViz. I have this one come up. They are not making money. They are down 14% year to date. They don't have any analysts covering them. Global Care, together with this, is subsidiaries, owns and operates commercial real estate properties in the United States and People's Republic of China. The company offers medical-related consulting services, including research studies. So it's a research firm. But it's been going kind of nuts lately. To be honest, the algorithm has you buy in at 54 cents. You're at 72 cents right now. And that was just a couple of days ago, September 27th. You have a completely oversold stock. I think there was some type of catalyst. Receives allowance for joint U.S. patent. So, yeah, there's a finance thing. You can read about this one. Avalon Global Care Corp, a leading developer of innovative cell-based technologies and therapeutics, today provided an update regarding the company's intellectual property portfolio regarding its QTY protein code technology. I got to be a doctor to read this. I'm not going to read all this stuff. But it was brought up by Tom, who is a doctor and who read this stuff. And it's at 54 cents. Again, this is for some of you risky folks that want to take it. If you read that and you understand it, buy into it. If you read it and you don't understand it, do not buy this stock. Don't take the risk. Tom's a doctor. He knows this stuff. But again, don't listen to somebody on the internet. Never listen to somebody on the internet. Do your own research. That's it. I'm going to stay on YouTube, I think, and trade a little while. I'm going to upload this. So I will be off of YouTube by the time you listen to this. But I will talk to you Monday. Be careful. The Dow right now, let's see where we're at live. The Dow is down. The NASDAQ is up. I mean, we're just floundering. Even Micron. Micron went up all the way to 51.72 today. Its low today was 49.81. It's at $50.94. I mean, they just released earnings. The VIX is down 3% to 30. So it looks like the volatility is easing a little bit. AMD, SOX-L, which is the long of the semiconductors. SOX-S is the short of semiconductors. That one's up. All of these are top traded. Right now, Carnival Cruise Lines is the top on Fidelity. It's down $1.55. It's down 17%. God, let's look at this. Let's look at the you go to FinViz and you type in CCL and you go to Carnival. And let's look at some of the news stories. Carnival Corporation provides third quarter business update. Yeah, it's horrible. Set to report earnings. Oh, they reported earnings this morning. That's why it's so. They probably reported crappy earnings. Let's see. Were you in this one before in our algorithm beforehand? This will be interesting. The algorithm had you out with a 0.47% gain on the last trade. 751. What's the PE on this? The PE, yeah, they're not making money. Forward PE is 11. They're down 54% year to date. And part of the reason the cruise lines are down is because during the pandemic, they just released so much stock and they sold so much stock that you had to, it devalued and just diluted the shareholders so much. But I'm not going on a Carnival cruise. I went on a Virgin cruise. I liked Virgin cruise. Virgin was great. I really like that one. Nike's down to 84. God. Tesla's up 270. Ironically, it was beaten down. I don't see too many big movers. Nvidia's up $2 to 124. Amazon's up. SPXU, which is the short, is down slightly. Norwegian is down big. NCLH, I should say. That one I've traded in the past. It's been a good one. Why is it bringing up Cisco? NCLH, let's look. It is down 11% with Carnival. I mean, it just fell off a cliff when they released earnings. So some of these stocks are buys. I don't particularly think that these ones are buys. Bank of America, interesting. Bank of America day range, $30.57 to $31.07, kind of went up. I think the target on this one is below 30. So I'm going to be done. I will talk to you guys Monday. Have a great weekend, and hopefully next week is better than this week on the market. I don't think it will be, so be careful what you buy today because next week isn't automatically a bounce up. It doesn't work that way. If the Fed comes out, if something happens over the weekend, we may be even further down. So they're talking about right now you're at 3628 on the S&P. They're talking about 3,200. So that's a significant 10-15% down. And remember, here's some math for you. You have to go up further if you fall. So essentially, say the Dow, just for shits and giggles, is at 1,000. If you lose 500 points, that's a 50% loss. But to get back to 1,000, it's a 500% gain, which is a 100% gain. Do the math. So as far as we move down to get back up there, it has to be bigger moves. That's the problem that we have with the 52-week high kind of, hey, it's got to get back there. Well, no, it doesn't have to get back there. It can make some moves, but it doesn't have to get back there. That's why I tell you, buy quality companies that are making earnings with products that you use and you would spend on. Apple is one of those. There's been a big debate with some analysts on Wall Street, and that's why you're seeing Apple being taken down, is because the debate on Wall Street is, will people spend money on apps and services or even expensive phones if we go into a recession? And is that happening right now? Meaning the iPhone 14, is it slowing down? Apple's down again today, almost 0.5%. If this dips back into the 130s, buy it. I think I think you do the same thing with that Jim Cramer said with Generac, GNRC. If you want to, say you want 100 shares of Apple, you just want 100 shares. I think that's $14,000. If you want 100 shares and you want to buy it all at 140, buy it all at 140. But my sense is in this market, buy 20 shares at 140. Then if it dips down into 130, buy another 60 shares, into the 130s. If it dips down to the 120s, you still got 40 shares left over to purchase. So you can still 20 shares left to purchase of that total 100 shares. So buy it in lots because you do have it going down. If it starts to go up, you can always buy it when it goes up. Who's to say that, it's crazy buying at 140 when it moves to 145 and then buying a few more? You can do whatever you want. But that's kind of the way that a lot of this quote unquote scalping of algorithms works as well. Is they just buy in lots. They scalp things on the way up, they scalp things on the way down. You can't time it. You want to buy and hold. That's the way you'll make your money. So, okay, I'm finishing this one. Have a great weekend. Bye. Share, export. Export. Sorry, guys. I know there's somebody else in here. Let me see. I want to expand that. Nobody's chatting. There's 2 people watching, and I'm one of them. God, that haircut looks horrible, but I haven't showered. Any questions? Questions, comments, concerns? Vixie. The VIX is down 3%. God, and this was a horrible live stream. I'm going to shut it down. I'm going to say have a good weekend. 2 views. I guess it's not that good. Should have done better. I may delete it. It just wasn't worth watching it. So, okay. See ya.